Hello, everybody, and welcome to the inaugural episode of Strategy Lab, a new show from Lighthouse as part of the Spotlight series of podcasts, where it's a very simple concept. The premise is simple. You, our clients, they come to us and they say, hey, we have Lighthouse, we love it, but we want to be able to do this or that. How would we use your tool to help us accomplish this task or challenge that we're trying to face? So, ladies and gentlemen, that is what this show is about. My name is Blake Reiter. I'm the head of hospitality research here at Lighthouse. And with me, as always, Daniel. Who are you?
Hello, everybody. This is Daniel. I'm a commercial strategist, also co-host with Blake for the Spotlight podcast. And as some of you may know, before I was host of the podcast, I had many, many years of commercial strategy experience. Most of those are using this very platform. So that's why we're super excited to kick off this new series together, because it's going to really help show off some of the coolest features of the Lighthouse platform.
Totally. And today we're going to be diving into events, revenue managing for events. But remember, each month where we show this, it'll be a new topic, a new challenge for us to face. And with that, I'm going to turn it over to Daniel. Daniel, let's start talking events. What's going on?
Let's set the stage a little bit. Revenue managers, commercial strategists, when they come in the morning and they're getting everything set up, what's one major problem that we have?
There's a lot, right? A lot to look at, a lot to digest. What should you be looking at first? Is there a way for you to really use the Lighthouse tool to identify what you should be doing? Direct me to what I should pay my attention to.
Exactly. Before I used Lighthouse, I always had problems with, okay, do I look at my rate shop first? Do I look at overnight pickup first? Or do I answer these 5 angry emails at the top of my inbox? What's really cool about the Lighthouse platform is we have added something called Smart Insights. So this is something that you may have already noticed up here on the top right of the page. And if I click on Smart Insights, it's telling you where you should be looking first thing in the morning. So it's got all of these different dates highlighted. And if I hover over some of these, it's giving you a little preview, right? So, okay, I know this is related to an event. We got Collecticon and we've got this volleyball event. Other things are a little bit different. So if I hover over, for example, this date, it's telling me that my market demand is lower than anticipated. So it's looking at dozens and dozens of different factors and millions of different data points, and it's surfacing those that it thinks are most important. And this just makes my life 10 times easier when I come in the morning and I just don't know where to start. So Check out this date here in the calendar view. This is in the middle of June, which is next month. We're recording this mid-May. So about a month out, we've got some dates here that have multiple Smart Insights going on. So let's click into one of these and let's see what the Smart Insights are telling us.
So I'm looking at this, Daniel, and I'm seeing both events, and I'm also seeing what looks to be alerts about your own rate setting. Like on the bottom, it says your lowest rate of 135 is lower than the ComSet median. I'm seeing events. So these insights that you're showing us are not just, hey, this is an event. It's also real life insights based on the data that and the information and the prices you've already set in the system.
Exactly. Yeah. It's actually multiple things. So we've got multiple overlapping events. We've also got this trend here where our market demand is higher than expected. Certainly worth looking into. And then also a pricing alert here where our lowest rate of 135 is now 20% lower than the ComSet. So that's another one that, again, if I'm coming in the morning and this is the first thing that I'm seeing, these are perfect places to start actioning instead of swimming around in a bunch of different spreadsheets and that sort of thing. First, let's start by looking at the events themselves. And you can see we've got a lot at this hotel, by the way.
I see overlapping events in this kind of midweek area. I mean, I imagine this would probably be a lot of corporate type demand.
And exactly, like you said, Blake, Tuesday, Wednesday, that's our corporate midweek peak. And now you're overlapping 3 events on top of that. Maybe we could push rate, but let's learn more about these events, right? So we got that alert for the volleyball tournament. And if I click on that volleyball tournament, I can see more about it. And it's got a lot of attendees. So this is 20,000 attendees. Now, the duration of this event is pretty long. It goes from mid-June all the way through the first week of July, but still 20,000 folks. That's a lot. You know, this is a tournament setup as well, so you can potentially expect some longer lengths of stay. And then as I look at our other events here too, we also have the Society for Human Resource Management. One is a lot shorter, more focused event from June 16th to 19th, but it's also got 10,000 attendees. which that's a pretty sizable event as well.
Wow. So there's obviously a ton of events that we have going on, multiple events of varying length, duration. We have events of different size and overlapping what we already established was a fairly robust midweek corporate base level of demand. So how are hoteliers to look at this, understand how to set rate for while obviously not isolating their base, but also taking advantage of the fact that we have so many events coming through, we have these pricing opportunities, we also have competitors who we're also going to want to consider. Like, how do you actually factor this all in?
I want to look at two places coming up. Let's talk about the forward-looking benchmark aspect of this. All right, so let's get our benchmarking tool open here, Blake, and let's take a look at that week where we've got the overlapping events in our midweek. I want to see how we're stacking up versus our competitive set here. So as we hover over these different days, here's the Monday that week, here's the Tuesday that week, here's the Wednesday. To me,
Off
it
looks
looks like
good.
our
Off looks pretty good.
occupancy is actually not bad, exactly. Our
Yeah.
MPI, market penetration index, is at a 94 on Monday. It's a little bit behind fair share, but not critically behind. Same thing for Tuesday with a 96 MPI. And then Wednesday, we're very, very strong. We're actually quite a bit above our comp set there for MPI on the Wednesday. And if I scroll down here, I want to also point out forward-looking segmentation for that week and how that stacks up with the comp set. If we look at transient, right now we're actually ranking number 1 out of 5 in transient booked business for that week. Now we're starting to put the puzzle pieces together, right? We now know that occupancy is pretty good. We've got a lot of transient on the books, but also remember from earlier, our smart alerts, we were a little bit underpriced, was what the
Right.
smart alerts were
I
telling
believe
us.
I believe that we were underpriced by about 20%, I believe.
So we're starting to hone in on the fact that this might be a rate opportunity where we can push rate. And also too, it looks like we are lagging behind quite a bit versus the smart comp set in our group segment. So I know group is a little bit more conditional, right? We can't just flip a switch and pick up more group, but this might be something that we relay to our salesperson, right? Like, hey, if you do get an opportunity for group and the price is right and it allows us to grow our ADR, it would be beneficial for us to perhaps take some group business. But let's now navigate to the rates part of this. So now we're getting into the rate shop portion. And here's that week again, right? So I'm hovering over these dates here where we have that event in our midweek. On the Tuesday, we're priced at 119. And I do see a lot of competitors that are higher than us. In fact,
Much
only
higher.
4 competitors in our comp set are lower than we are. Our median comp set rate is 184. Our price is only 119. And then on the next night, we have a similar setup. We're a little bit higher. We're at 124, but our median comp set rate is much more elevated at 177. So
Mhm.
these are dates, Blake, where I think we are fully justified in pushing rate because all of the signals so far have been green lights to me. Segmentation, demand that we got from the smart alerts, the event calendar, and now we're seeing that we're lagging behind our comp set by a fair bit on pricing.
Well, let me ask you a question then, Daniel, because obviously hoteliers are sometimes intentionally pricing below their comp set just because they know their value prop is lower. So they're competing more on rate to maximize their own RevPAR, knowing that they'll, get occupancy because of their rate. So how are you factoring that into the equation?
Yeah, that's a great question. And the honest truth here is that your mileage may vary. I mean, you as a commercial strategist, you know your hotel best and you know where you typically line up versus your comp set. But
Mhm.
for this particular hotel, this is a hotel that tends to be more so towards the top half of that comp set average. So whenever we see that we're pricing so far behind this particular competitive set, this is definitely a big trigger for us to push rate. We know that we can be priced a little bit higher here. It really just depends on how you set up your comp set and then how you stack up to your competitors, that you compete with most closely.
Right, because if you look in the top left of what you're hovering on right now, the hotels on the books is 50 and the market OTB is 36, which is that's a pretty big delta in and of itself right there. So if you're thinking about RevPAR, for your own property versus comparing it to whatever the, quote unquote on the books RevPAR would be, I would just be I would wonder how that would all factor in. Obviously, if you were priced higher, obviously your OTB would not be probably as much, in excess of the market.
Yeah, exactly. And to me, this looks like we started lower. We picked up more occupancy than the comp
Yeah,
set did. And so now we can
so I can drive
appropriately
it.
Push rate, exactly. Yeah, now we can drive rate because now we've got that base occupancy. And here, let's go take a look at performance. Let's look at some business intelligence. Let's start by looking at our heat map. And this gives us a really good bird's eye view. We can take a look at all room night activity from any given date. And again, our focus is going to be here for that middle of June. And there's also one other quick cool thing I'm going to show you, Blake, here when I get this loaded up. But let's look at our 7-day pickup. Click apply. Okay, and it loads up here. Here's the cool little bonus. So these are the dates that we were just looking at in the Smart Alert. And once it loads up, if I click on an individual cell, in this case, the 15th, 16th, 17th, like we've been talking about the whole time, you can see those very events that we've accepted from our events view are now flowing through to the heat map. Pretty cool, right? Pretty cool. But yeah, let's take a look at the 7-day pickup here. And in June, you can see that the pickup for that week is actually more so falling over the weekend. So the weekend before, the weekend after, we can see exactly what is picking up down to the reservation level, which is really cool. So we can see that for this date, we are picking up some promotional discount with an ADR of $169. We've got some website direct, and we've even got a couple of wholesale rooms. Now, here's something really cool. This is organic, happening on the fly that I didn't really prepare for, but check this out, Blake. We've got some wholesale rooms that are booking at 62. I think that's kind of interesting, right? We know that we're way out in front on occupancy, but we know that we're a little bit underpriced versus the comp set. So really our goal right now is to be pushing rate, and yet we're picking up some rooms here at $62. I think that for these dates, at this point, we don't necessarily need this wholesale business. It looks to be pretty low rated. So I think for us to grow ADR, push our rate, we've already got the good base occupancy. I would actually probably yield this wholesale business out and continue trying to drive that pickup in these, website direct, promotional discount segments, because those have a much stronger ADR that was closer to that comp set average forward-looking advertised price that we saw. And then there's one other final place that we can look. Let's look at our pickup and pace for these dates. So here is this view, the last year and forecast view within performance that's so important because this is looking at pace. This is how we are performing versus the same time last year. And I specifically want to call out this column right here. So this is our same time last year, our variance to same time last year. So if we look at these dates that we've been talking about the whole time, this midweek on June 16th and June 17th, we are actually up in pace very substantially from an occupancy perspective. So this year, we've got 174 rooms sold on Tuesday. Last year, we only had 129. And then on Wednesday, we've got almost 200 rooms sold. Last year, we only had 133 rooms sold.
Wow.
But you'll notice that we're behind in ADR. So this kind of all ties in with everything that we've seen from the start, right? The smart insights. And then we went in and looked at our benchmarking, and we saw that we're actually looking pretty good from an occupancy perspective. We looked at the market segmentation, and we saw that we had some low-rated wholesale rooms. So the whole story is kind of coming together here. This is a perfect example of some dates where we're looking good on occupancy, we're pacing good on occupancy, but we're a bit behind on rate. So let's start pushing rate in the midweek where we know that that demand is pretty strong. And let's see if we can kind of steer the ship now. And by the time we get to next month, if we've done everything right, then we're going to win on occupancy and rate and therefore RevPAR.
I mean, if you look at this, Daniel, this literally everything that we saw on those first few bullets, we obviously are doing the drill down, but I mean, everything that was captured in those first few bullets on the first Smart Insights page is all supported right here. But I mean, those bullets, we saw what actually needed to be done within seconds.
Yeah, exactly. Yep. And we could have done it if we just accepted the Smart Insights. Boom, it's in seconds. But this is a perfect example. Like if you do want to take that analysis to the next level, this is just explaining all of the logic and everything that's going into those Smart Insights. Always fun to look at.
Well, ladies and gentlemen, that was Strategy Lab. Each month, we're going to come at you with a different circumstance or set of issues that revenue managers come to us all the time and say, we want to use Lighthouse better. We want to be able to use it to its full potential. So don't forget to subscribe. Don't forget to tune in. And we will see you guys next month with another Strategy Lab. My name is Blake Reiter.
I'm Daniel Foreman.
And we will see you next month. Thanks for tuning in.